Okay, so what we're going to talk about now is my favorite candlestick pattern. This is what I use for my entries most of the time. I do use the pin bars, I do use the dojis, of course, everything as additional confluences and confirmations. However, the engulfing is the big confirmation that I'm going to use to actually enter trades. So engulfing is pretty much exactly what it sounds like. It is where one candle engulfs a previous candle or a number of previous candles. Now let's show you an example. Here is a bearish engulfing candle. So this red candle here on the right has engulfed this green candle, and it's also engulfed the 2 candles before it. So there's 3 candles there engulfed within this one red bearish candle. Now, as you'll see, from there, the market tumbles. So the engulfing would have provided you with a great selling opportunity to actually get in line with this trend. So the engulfing is a super accurate, super good trend direction or continuation pattern that basically shows a shift in momentum. Now, if we remember back to what I always say, try and think about why the market is doing what it's doing. We don't just want to see candles here, we want to see the reasons behind them as well, okay? So that we know why we are actually trading how we're trading. Now, if we look at this engulfing pattern, let's actually just get into the context of the market movement. Downside movement, okay? Push back up, forming a lower high. This is where we want to sell the market. We have a supply zone, a lower high, in line with the trend. What actually triggers our entry? This bearish engulfing candle. So if we look at these previous ones, right, we never got any bearish engulfing here. Yeah, we got one there, okay? But that wasn't actually in line with anything. So that's why this is important to actually remember to use in line with the trends, as we always do. But if we look at this then, supply zone, push back up, forming the lower high, but no engulfing. We actually got another pushback up then to test it for a second time. Now, the engulfing is where we really want to enter. The reason we wouldn't enter here is because we are still pushing up and there's no engulfing. And what engulfing shows is weakness pushing past the previous strength. Or on the flip side, an example of this one here, strength pushing past the previous weakness. So seeing then supply zone, downtrend, all the confluences stacking up. Seeing that first tap wouldn't have given me too much confidence to sell, but when we see this second tap followed by an engulfing, which basically wipes out all of the previous price action above this level here, that there is what gives me my confidence to actually enter a trade, okay? So all of this previous price action has now been completely invalidated by one single candle. It shows us that the momentum that was pushing up is now completely switched and is pushing us back down. So seeing that bearish engulfing candle there, it would be a great trigger for a trade. And the reason I like it so much is because it's a solid confirmation. When we see those pin bars, they're not a solid confirmation. They are essentially a run for liquidity that we can then work from. When we see dojis and spinning tops, they're not a solid confirmation. They identify possible reversal areas and possible slowdown points in the market. But this engulfing pattern provides us with a solid entry confirmation to actually trade with straight away. So that's why I like them so much. And of course, they do take it back to that momentum we spoke about, the candlestick momentum we spoke about at the start of this video, at the start of this section, sorry, where we're seeing, momentum pick up one direction or the other. When we see this engulfing, that's exactly what the market is showing us. So let's find some examples of bullish and bearish engulfing candles in the market, and I'll show you, they do happen a lot and they're very, very good. Right, here's one. The market has been going in an uptrend. We top out, we come back down, start forming these lower lows and lower highs over the previous ones. And then we see here, bearish engulfing. I mean, straight away off the bat, we do have a bearish engulfing there, okay? So that's engulfed 1, 2, 3, 4 previous hours of price action or previous days of price action because of the chart we're on. So that 4 days of price action wiped out straight away. Now, we then get another one, taking out another day of price action. Another one taking out another day of price action, and another one here taking out another day of price action. So all of these bearish engulfing candles could have provided us with entry points for a big short trade, okay? The best one, of course, here, where the market really fell off. But as we see, when we're in a downtrend and we see engulfing candles, we have great opportunity to sell. So let's actually look for some bullish engulfing candles then, when we're in an uptrend and we see bullish engulfing, which actually leads us to an entry point. So in this instance, the market is moving up. We see here bullish engulfing where we have this bearish candle completely taken out by this bullish one. So there is a bullish engulfing taking us into a new phase of upside. We have also another bullish engulfing here, which then, of course, we get a bit of rollover, but we do then continue into an uptrend. Here, bullish engulfing taking us out the highs of this range, and then bam, the market takes off into this whole new phase. And then there's another one there, okay? Rollover, bullish engulfing, bam, off we go. So engulfing is a really, really nice one, a really solid entry point for trades. Bearish engulfing, you're going to see so much working out in downtrends. Bullish engulfing, you're going to see working out so much in uptrends. So it's definitely one to get down. It's definitely good to understand why it forms. Of course, being that shift in momentum and an area where the buyers take control over the sellers or the sellers take control over the buyers. And it's also very, very important before I finish the video to make sure you're using engulfing in the right locations. So as we spoke about before, we are going to see them very, very prominently, very, very often in the market. However, they're only going to be useful to us when they're in viable places. For example, a bullish engulfing here in a supply zone, is that a good idea to buy? No. And you'll see the market falls off straight from there. Now, this example that we spoke about before, a bearish engulfing here before we even trade into any zone of interest, would you sell that? No, because there's no zone of interest. There's no point of interest to sell from. We want to wait for zones to be met, and we want to make sure we're actually trading it in line with the trend, okay? So here, for example, we're in a downtrend, clear downtrend, lower lows, lower highs, lower lows, lower highs. Do we want to buy this bullish engulfing? No, because we're in a downtrend. There is no shift in momentum. So why would we actually go and buy a bullish engulfing that's actually in a downtrend? Okay. It's very important that you think logically about why you're trading this engulfing. Does this engulfing have strength? Does it have logic behind it? Or is it simply you chasing a single individual candlestick pattern? So here's one as well, a bearish engulfing in a very clear uptrend without actually having traded into any zone of interest. Now, if we look at this example, it's more likely that this is a retest before continuation. So had you sold this bearish engulfing simply for it being a bearish engulfing, you'd have been left feeling like an idiot because you'd have got wiped out. Now, on the flip side of that, if we actually look deeper, we see here the market pushes back through this level and retests it. Can we then use these engulfings as an entry? Well, yeah, because we've changed now from higher highs, higher lows to lower lows, lower highs. Okay, so then an engulfing candle like this, for example, would provide us with a nice selling opportunity, as would this huge engulfing candle that swallowed many, many, many days of price action. So the momentum of your engulfing candle does matter. I mean, if you do have an engulfing candle, the wicks, etc., can be quite large, but of course the best engulfings are going to be the strong momentum candle bodies. Now, for example, this one here, where we actually get a nice bullish engulfing of this previous candle with little to no wicks. Now, strong bodies are what we're going to want to see, and strong bodies in line with the trend and in line with other market structure is really going to be the most useful things to see. Now, if we look at this daily chart, we can see here this potentially could now lead into some form of rollover, right? Bearish engulfing. Now we've closed beneath this entire trading range. We could very well actually make a shift down from here in the future. So there we go. That's bearish and bullish engulfing for you. The final tips and pointers. Focus on bullish and bearish engulfing only in line with the respective trends. Better momentum, stronger momentum is better. Make sure you're actually only trading out of supply zones, out of demand zones, or out of points of interest, okay? Don't actually get caught up just buying or selling engulfings randomly in a trend, because if the market needs to pull back, you're going to get burned. Now, if you see an engulfing after a pullback or from a point of interest, like a supply zone or a key level, that is how you're going to get the most accurate and successful results with these engulfing candles. So there we go. That's it for this video. That is my favorite candlestick pattern, the engulfing pattern. Bullish engulfing and bearish engulfing, where we see previous price action wiped out by current price action. Very, very interesting one. Very good one to actually go and study now on the charts in the past price data. You will find some really nice examples. You'll find examples where it does work, where it doesn't work, and it's going to help you then, if you do that, to identify the most accurate levels, the most accurate areas to be looking for engulfing for your own trading when you come to actually putting your money into the markets and trading live. So thank you for watching, and I'll see you in the next video when we're going to talk about basically the opposite of this candlestick pattern, but also a very, very interesting and valuable one for successfully trading.